Good morning, good evening, good afternoon, and welcome to ioRadio with your host, Adam Smith. Today on the show, we're going to be talking about Michael Saylor and MicroStrategy, or as he's now called, strategy. What is going on with him and this company, and what exactly are they up to, and does it make any sense? We're going to dive into that. And this started with me kind of just realizing, that Michael Saylor has gone all in on Bitcoin, turned his company MicroStrategy into basically a holding company for Bitcoin, but it started out as an IT company. So I was like, why isn't he developing actual blockchain applications instead of just buying Bitcoin like some kind of speculative investor? So I started doing a little bit of research and I realized actually MicroStrategy has been trying to do Bitcoin and blockchain-based applications. We haven't heard much about them because I don't really think that they've gone anywhere, and that's kind of one of the problems. And we're going to talk about that. We're also going to talk about what they're up to right now with this massive amount of Bitcoin that they've purchased and how they are promoting it. So I'm not an investment expert or a broker guy. I don't have any of that kind of stuff. This is not financial advice, obviously. And I'm going to try to talk about this from the perspective of you don't really need to know a whole lot about what's going on in this industry or the inner details of these people. I will assume that most people may be familiar with who Michael Saylor is, but maybe not. I don't assume anybody has any kind of deep level of knowledge on this subject because I want to make my podcast more generic, available to just anybody who wants to understand what's going on. So there's a company called MicroStrategy out there, which is they call themselves a business intelligence company. They've developed data analytical applications for many years, and they've been around for a long, long time. Michael Saylor is the head guy behind it, and they got in trouble in the year 2000 misrepresenting their data on their public filings and got sanctioned by the authorities and got in trouble and their stock tanked. So Michael has a history of not being completely honest about numbers and stuff like that and getting in trouble with the government, central authorities. That may have motivated him to much later on deciding to go balls deep into Bitcoin and just buy tons of it. And he is now the principal Bitcoin maximalist. Many people call him Bitcoin Jesus because he's like the head evangelist for Bitcoin, specifically Bitcoin. He doesn't care about any other crypto or crypto technology except for Bitcoin. And he will vehemently argue that Bitcoin is the only thing that's really important, of course, because he's put billions of dollars into it. So let's talk about what is going on and does it make any sense, shall we? So I was wondering, where are these blockchain applications that MicroStrategy should be developing if this is such an amazing new technology? So I Googled it and I found out that he does have a new suite of tools that he has announced called MicroStrategy Orange. He did this about 9 months ago, and now he's rechanged the name from MicroStrategy to just strategy with a little Bitcoin at the end of it. So I started poking around on the websites and I came across some details on how his company is set up and what he's doing with this Bitcoin thing. We're going to talk about that. You definitely want to wait until the end because I'm going to reveal some rather crazy metrics that he has just pulled out of his butt to try to make it seem like this thing he's created has potential. It's really interesting from a kind of a grifty point of view. You'll find out. But first, we're going to talk about how MicroStrategy or strategy, I'm going to probably just call it MicroStrategy, what they're doing and how they're trying to make Bitcoin more palatable to the general public. So let's start with this presentation that he made at a convention, and we're going to talk about what he's saying and what it promises.
He is also the chairman of the board of directors. He is one of the leading advocates for Bitcoin around the world. Give it up for the Michael Saylor.
Well, actually, one of the more fun parts of my job is I get to work with the engineers at MicroStrategy, and we've got a few projects built on Bitcoin we've been working on. Last year, I had the opportunity to share with some of you our Bitcoin Rewards and Lightning project.
So in 2023, he had this Bitcoin Rewards project. I heard somewhere that he was kind of like hoping that maybe like McDonald's would buy on to his scheme so that, they could give a little bit of Bitcoin, as some kind of an incentive program or something. But I never heard much beyond that. Apparently, it was a system that they set up. How many customers do they have? How big has it grown since then? Because now that's a year ago, right, Michael? So tell us how that project worked out.
This year, I've got something a little bit different. It's called Bitcoin Security.
Pivot. So he's not going to talk about how that scheme, how successful it was, how many new clients he's gotten. So now he's got Bitcoin Security. This is a recurring theme that you're going to find in the crypto world, where everybody is always talking about what's on the horizon. They never talk about what's behind them. They never talk about what they said last year or the previous year and show you what's happened to it. So I guess if this Bitcoin rewards thing had worked out, he would be talking about how great that is. So now he's pivoting to security. So let's see what this is all about.
Bitcoin has a lot of use cases. I mean, the use case that I talk about a lot is store of value, and I think that's obviously worth quite a lot to the civilization.
I'll put up my little stupid crypto talking point debunking Bitcoin as a store of value right there. Ding!
A use case that we're going to talk about with David Marcus at the end of the day is medium of exchange, and that's a very exciting session, and there's a lot of discussion about Bitcoin as a transactional settlement technology. But there's a third value proposition for Bitcoin, which I'm also very interested in, and it's a system of trust. You have this immutable, unstoppable, immortal,
unstoppable, immortal blockchain, which I find kind of funny. It's not immutable, Michael. There's multiple versions of the Bitcoin blockchain right now. There's BTC, there's BSV, there's BCH. All of those were versions of an original blockchain that forked into different versions. Now, you guys would argue, they're different versions of the blockchain, but at one point they were all the same, and then it split into three. So if Bitcoin Cash is trading at any value over zero, that is value that is taken from the main Bitcoin. So it does change. And as far as being immortal, I mean, that just seems absurd. The mortal men operate the blockchain, and the blockchain is dependent upon a whole plethora of middlemen and different systems and permission. You need permission to use wireless, and you need permission to get on the internet, and you need special software, and you have to have your private keys.
Decentralized network, and it's storing data, and it's providing integrity, and it's executing transactions. And of course, the first grand idea was, first people thought, we'll move money without a trusted counterparty. And then they thought, well, I guess we could just keep the money in cyberspace forever without a trusted counterparty.
Provided everybody in the whole world spontaneously agrees that Bitcoin, what blockchain says is important, which most people don't. Provided that you ignore the fact that there are tons and tons of counterparties involved in every Bitcoin transaction. There's tons of middlemen. There's the networks, people operating the networks it depends on. There's the node and the miners that are managing the blockchain that can decide whether your transaction gets processed in what order based on how much you tip. Those are all middlemen. Those are all counterparties. It just boggles my mind that he wants to pretend that there's nobody in the middle that can meter what you're doing, which is false.
And that was the medium of exchange and the store of value. But the third thought is, well, if there's something that I trust more than I trust any particular counterparty, maybe I can leverage that system of trust. And that was really the genesis of this next project. And I'm going to introduce it, and then Cesare, our head of engineering, is going to show it off. It's based upon this idea of decentralized identity. For those of you who who use Instagram or YouTube or WhatsApp or maybe X, one of the frustrations has been, how can you trust anything that's posted? For a long time, I have a fake Michael Saylor channel that spins up every 15 minutes on YouTube. And the way that you know it's not me is I'm offering to give you 2 ETH for every ETH you send me. And that's definitely not me. But also, I'm offering to give you Bitcoin. I'll give you 2 Bitcoin for every 1 Bitcoin you send me. And it's very frustrating because I know it's not me, and a lot of people know it's not me, but
somebody has just taken a clip of him saying, I'll give you 2 ETH for every 1 ETH, and now that's going to be used in one of those scammy things. Thanks, Mike.
People seem to think it's me because I get a lot of emails, sometimes saying, I got tricked by that. And the solution oftentimes is a very laborious verification process. It may be expensive. It costs like $1,000 a month for a gold check from X Twitter.
It seems to me that if there's going to be some diligence in determining if something is a scam, you have to employ that diligence, period, regardless of how you do it, right? If I saw a video of Michael Saylor promising to give me 2 Bitcoin for every 1 Bitcoin, there's lots of steps that I could take to verify that that's legitimate. Chances are the people that are falling for these scams aren't taking any steps, so it doesn't matter what steps people could take, right? They probably are just high AF, and it's late at night, and they've had a couple of drinks, and they just saw that, and they just weren't thinking and did it. And I don't know if a different type of check would make a difference. Do you?
And it's a proprietary gold check because you can't take it to WhatsApp or YouTube, or your Microsoft environment. And of course, Meta's got their own little blue check thing, and then Google's got a different black check thing, and they don't work that well, and they're all very proprietary. And that's one of the challenges of digital identity today. You end up with a centralized identity, and maybe you're logging in with Facebook, or you're logging in with Apple, or you're logging in with Google, and you start thinking, well, what happens if one of those websites or one of those systems gets hacked? Or what if it goes down? Or what if one government somewhere decides to send a court order to one of those? Maybe the Australian government sends a court order to one of these things, and they take you off the network.
So I think maybe I figured it out now. I don't understand this, but then again, maybe I'm not his target market. I don't have the Australian government trying to take me off of the internet. I'm not sure what you would do to cause that. Maybe peddle some child porn or, fund some cyber terrorism or whatever. But apparently, if that's you, if you're up to something to the point where entire nations want to mess with your digital identity, then I guess maybe this product is for you. But how does that appeal to the rest of humanity?
It's a lot of anxiety. It's very fragile. It's very brittle. It's very expensive. And it just doesn't work that well. And I think that's been a frustration of a lot of people. You end up with all sorts of challenges with these frameworks. How do you verify who you are? Is the data private? Do you really want some central organization to know everything you logged into? How do they interoperate? And that caused us to start thinking, wouldn't it be great if instead of a blue check or a green check or a gold check or a black check, what if there's an orange check? What if
an orange check? All right, people, we have solved this problem. No blue, no black, no green, no gold. It's an orange check. Ugh. Don't you feel stupid?
There was a cyber passport that you got once in your life, and it was based on public-private key cryptography.
A passport for your entire life. I mean, even his example doesn't make sense, right? Because passport has a picture and you change your appearance over time. It would need to be revised. You change your address. You change certain details. How would you like one credit card that was permanent for your whole life? That way, if you make one mistake, somebody gets the number, you're screwed. This is the problem with the immutability of blockchain. It doesn't really make sense for these kinds of applications. And Michael is just in this little bubble where he's visualized that this would be better. But when you zoom out, it doesn't seem to work that way in the real world, Michael.
That you could take with you. You know, if I paid a nickel for it or a penny for it, and it was anchored into an immutable, unstoppable, incorruptible network, that could be a global standard as opposed to some local nation-state standard.
It could be a global standard, yeah. I mean, you can visualize and dream these kinds of things, but where's the motivation for everybody around the globe to adopt your standard, Michael? This is the problem. You could visualize that, hey, everybody use my login system. And then when everybody does, it's a global standard. But there's reasons why Google uses its login system and Apple uses its login system and Meta uses its login system. They all want control, and they've got their walled gardens, and they're very limited in how much they're going to peer with other entities. What makes you think that your system is going to suddenly replace everybody else's? This, I understand, like, if a 12-year-old came up with this concept, dude, I got this great idea, like a master login for everybody else. He doesn't have any life experience. The kid doesn't realize things about corporations and market share and intellectual property and all of that. But Michael Saylor does, right? He has been running a public company for decades. He certainly knows that his company exists in the shadows of much bigger companies that he has very little chance of competing head to head with. So why is he promoting this idea that if he's come up with this scheme, it could just get global acceptance because he hasn't proven that it can do anything special or better other than it being decentralized. That's the magic word. It's on blockchain, so therefore everybody else is going to want it. Meanwhile, everybody's like, what? Why?
And then maybe I would log into that system using my private key and public key pair. And we saw a little bit of this pop up. One example is in the Nostr environment, when people started using public-private key pairs to log into various Nostr-compatible clients. And of course, we saw another example of this in Bitcoin, where the public-private key pair is how I move money around.
Just a little note, public-private keys is basically just cryptography authentication. Anytime you log into a website and you use a password, it's very similar. Your password is your private key. Public key would be an encryption algorithm with an additional bit of information you often called a salt. But all basic authentication involves the same scheme where you provide some kind of a secret code, and then they compare it to what was on file the last time you set something up, and they authorize it. It doesn't matter whether we're talking about Bitcoin, public and private keys, or logging into Facebook or Google. It's a similar authentication process. It's been around forever. There's nothing particularly special or unique about what Michael is selling here.
And the most famous example or question here has been, well, will Satoshi ever prove they exist by digitally signing a message with their private key? And of course, we know that's possible in the Bitcoin.
So what Michael Saylor is suggesting is that Satoshi's wallet is still sitting on blockchain dormant. And whoever could produce the private key that would move that crypto around could theoretically be Satoshi, or it could just be somebody who has Satoshi's private key. It doesn't necessarily prove you're Satoshi. It just proves that you know the password. And we all know that sometimes people can guess or steal other people's passwords. Now, obviously, private keys are much longer passwords. They're much harder to guess. But all of the other things mainly apply, which is if somebody knows your private key, they have access to everything else. So the authenticity question there is soft at best. All it proves is somebody knows the private key. It doesn't prove they are Satoshi. If you lose custody of your private key, your identity has been compromised. It doesn't matter whether it's on blockchain or not. And this is the fatal flaw. This is the Oracle problem that that Michael just ignores in his entire pitch of authentication.
Environment, and it's worth, in this particular case, $65 billion to do it. But we haven't really levered this idea of public-private key cryptography anchored into a proof-of-work network for most commercial applications.
Yeah, there's a reason for that, Michael, because it's not practical. It wastes tremendous amounts of energy. It's slower. It doesn't scale. And it promotes in a market that is primarily composed of a lot of criminal activity.
And MicroStrategy thought maybe we could approach this idea of decentralized identity combined with Bitcoin and then create an enterprise application for it. So that was the genesis of this Orange project. And what you can see is on one side, you've got the decentralized identity, and that's the public-private key pair. On the other side, you've got the Bitcoin network, which is your system of record, which is really just a global fault-tolerant computer system controlled by no government, no corporation, no person.
That's not completely true. There are cartels, mining cartels that have almost control of the crypto. And there's no guarantee that the Bitcoin network is going to operate continually. If the price of Bitcoin goes down, then the Bitcoin network will become, it'll grow smaller too, to the point where if the price of Bitcoin doesn't trade at a high enough level, it'll eventually just become abandoned by people that want to make money more efficiently elsewhere. I mean, that's the problem with this decentralized network. Since nobody's in charge of it and there's no accountability, it's run by a bunch of self-interested individuals who are all operating nodes hoping to make money. If it no longer becomes profitable operating the Bitcoin network, then they'll just go elsewhere. There's thousands of clones of Bitcoin right now that are abandoned, that the blockchain just doesn't even exist because nobody's operating nodes anymore because the value of the tokens has become essentially worthless and nobody wants to play. And Bitcoin is functionally identical to any of those dead cryptos. The only difference is it's just more popular. But there's no guarantee that it's going to stay popular. I know it's right now it's at the peak of its popularity, but there's no guarantee that a year from now this will be the same situation.
Our vision is to provide an internet native, decentralized digital identity backed by Bitcoin.
So what he's doing here is he's basically taking an application that's already pretty ubiquitous, authentication, which is, Google has a system, Facebook has a system. Every major player has their own authentication system. Microsoft has their IDs. And he's proposing to compete with this many, many, many more corporations that have better resources and have more market share. But his shtick is that he's tacked Bitcoin onto it. Now, what does Bitcoin offer? He's going to obviously hype that it's on the blockchain. Nobody controls and owns the blockchain, and therefore that's better. But as I said before, since nobody controls it, there's no guarantee that it'll stay in operation. That's just, your belief that it will.
We want to use the open standard of DID, and then we want to use the open standard of Bitcoin, and put the two together. And of course, why would you use Bitcoin? Well, it is fault tolerant. It is censorship resistant. It does use the most advanced cryptography. It's a lot better than most people's password managers and these federated systems. It's distributed. But of course, we come back to the issue of why is Bitcoin successful? It's open, permissionless, egalitarian. That's why it's successful. So an open standard means it could appeal to every country, and it could appeal to every company. There's no way.
I could argue on any of those points whether it's really egalitarian and all that, but the proof of work business model wastes tremendous amounts of energy. And we could just single that one element out of Bitcoin, which makes it completely impractical. The amount of energy that the network uses just to operate is so much more than any regular database that would do the same process would require. It's just obnoxiously inefficient.
Way that Apple wants to trust Google. There's no way that Google wants to trust Meta. There's no way that Americans will trust a Chinese company.
So, but he's saying everybody should trust Bitcoin and blockchain because it's decentralized.
There's no way the Chinese will trust an American company, right? And so how do you build a system for millions of counterparties that maybe don't trust each other, and how do you make it open? And of course, the beauty of Bitcoin is there's been so much development on public-private key cryptography. In the Bitcoin system, people spend obsessive amounts of time thinking about, seed phrases and seed phrase recovery and public-private key pair, and then multi-signature and signing devices. Because you're going to move a lot of money around, that's important. Well, what if we could leverage all that knowledge and all that research, but use it in order to fight cyber hacking and phishing scams and counterfeiting, and plug it right into an enterprise system?
You'll notice that he's talking in the abstract in generalities. Fight scamming and phishing and hacking. I would love to see him go into a very specific case of how this would work. And I bet it would involve a lot of presuppositions of people doing certain things that if you did a similar non-blockchain version of that, it would also solve the same problem. So he's proposing that there's a digital identity system that'll use a blockchain. So it's basically use this technique to verify what you're doing is legit. Well, that's one way of doing it. There's probably a dozen of other non-blockchain ways you could do that too. So he would assume that in lieu of not doing anything, you use our system, but there's other options for people checking to make sure whether they're being defrauded or not. So again, I'm still, Mike, what is new and special? Why should I use this instead of Google's?
So, what are DIDs? A unique identifier. Users control their own keys. You've got privacy, and you've got decentralized verification. You put the two together, and that's something really special, the DID plus the key pair. So what we're proposing is an open standard. It's DID:BTC. It's open and compliant with decentralized identifiers. It's simple, it's secure, it's extensible, and it's efficient.
Now, this is really a misleading, disingenuous statistic that he's citing regarding it's efficient. He is basically saying you could stuff 10,000 DID transactions into one Bitcoin transaction. But what's the likelihood that somebody is going to need to stuff 10,000 transactions at once in a single Bitcoin transaction? The likelihood of that happening is incredibly rare. But more importantly, a better metric of efficiency would be how much time it takes and how much energy it uses. And he doesn't mention that because by that metric, it would be one of the least efficient methods ever in the history of humanity.
What's really exciting about this is you can integrate with this at the layer 2. So this is an open protocol to the world. Anybody could just work with this protocol and build their own stack of enterprise apps or retail apps or the like. But it's...
Again, you could build all these apps, but what's in it? I can understand if half of the world was already using it, then you'd want to open up that market. But he's talking about something where the market is already saturated with global IDs used by much larger companies. So it's a nice idea, Mike, but is it going to take off?
Also interesting because it's extremely efficient. You could burn up to 10,000 of these identifiers in a single Bitcoin transaction. So imagine doing one off-peak transaction and then you've captured or created 10,000 orange checks. And of course, they're good. To say they're good for life is maybe an understatement. They're good for lifetimes, right? Once you've created this, maybe it's...
So again, the immutable thing, which is more of a liability than it is a benefit, right? I would not want to have one user ID and password for life, because sometimes things happen. If somebody got my password, it would be compromised. I don't get this.
It's good for 100 years or hundreds of years. So it's kind of a cool idea. It's a lot better idea for identity than I pay 5 different big tech companies $8 a month or $100 a month or $1 a month for the rest of my life in order to keep my verification check. This one you can take with you.
Yeah, there's just so many ways this whole scheme can fail. And it all has to do with getting your private key. In order to be able to authenticate who you are, you're going to have to spit out your private key to some API, right? In order to log into any kind of system, you have to specify your password. You have to trust whoever it is that you're taking the password is the right entity. So if you spoof one of these APIs and say your Microsoft or your MicroStrategy Orange, give us your private key to verify who you are, and they actually get your private key, you're screwed. Now they can take over your whole entire identity, because it's not about who you are. It's not about your phone number. It's not about your address. You know, in the real world, we have two-factor authentication. We have multiple levels of reaching people. And that way, if you just lose a password, you're not completely screwed. In this scheme, it's like you're going back to a worse time where there's more damage that can be perpetrated if a mistake is made, which seems to be a kind of a recurring thing with crypto and blockchain. You make one mistake, the results can be catastrophic. And now, instead of just losing your money, you can lose your entire identity. I do not get it.
The way we've integrated this is we've got an enterprise version. It's almost like there's a custodial implementation and a non-custodial implementation. And there's you can self-custody your ID and take it with you, and you can own it yourself. Or a company could actually issue this ID very quickly to every single employee. So maybe your company issues 9,000 of these orange checks, and then the company can manage the key pairs. And
so he's got a centralized version of the decentralized ID too.
If a person's no longer an employee, then maybe that key pair is revoked. But if you wanted a retail or an individual identity, you could have that as well. And I guess in the future, you might even get to a multi-sig situation, which would be very interesting for this.
All right, I don't want to get too deep in the weeds of this. It's about halfway into his presentation. I think we know where he's going. He's basically pitching an alternate identity login system. But again, using the immutability of the blockchain, there's a lot of problems. He glosses over the fact that operating Bitcoin's blockchain wastes tremendous amounts of energy, and there's other liabilities. He's only going to talk about the positive things. He's not going to bring up any of the caveats. What happens if you lose your private key? How does this system deal with that? I don't want to dive through another 15, 20 minutes of this. So let's now pivot, since that's what Mike does quite a bit. So we're going to dive now into what's being said about this new orange check thingy. So let's just take a quick look. Scroll down. So how does MicroStrategy Orange work? Following the hints, MicroStrategy will get into Bitcoin software development as the ordinals craze took off last summer. Now, I did an episode on ordinals. If you didn't catch it, it's worth going back to see that one. There was a code update to Bitcoin that allowed you to basically stuff arbitrary data onto the blockchain, and they call it ordinals. And this is how Michael and MicroStrategy is incorporating their identities. They're basically just stuffing code words onto the blockchain that they can go back and read later. And there's nothing particularly special. This is how NFTs were implemented on Ethereum and then later on Bitcoin. It's just a way of sticking a unique piece of data in addition to a transaction on the blockchain itself. So he's basically now jumping on the bandwagon where he's going to crap up blockchain with all kinds of third-party data that has nothing to do with actual crypto transactions. A lot of people complained about this, that now blockchain was just supposed to be facilitating transfers of tokens back and forth. Now it's being used as a little general purpose database to stuff little bits of data that you can say represent ownership of a particular picture of an ape, or in this case, somebody's identity as tied to an orange check or something. It's all arbitrary. So Bitcoin-based decentralized identity system, blah, blah, blah. How would Orange be used in real life? MicroStrategy said the potential of MicroStrategy Orange and decentralized identifiers in Bitcoin could also be used to verify users on social media applications or authenticate text messages or medical records. As I've said, we've already debunked this notion that blockchain can be used to verify the authenticity of things. The second half of my documentary, Blockchain Innovation or Illusion, gives a very specific example of like supply chain tracking and how blockchain would be used. And I demonstrate what's called the oracle problem, that you cannot depend on blockchain to be accurate. Whoever puts the data on chain is the oracle, and they're the ones that are determine whether or not the data is accurate and authentic. Same situation here. Somebody could, whoever intercepts your private key and has that becomes the oracle. Maybe it's you, maybe it's a phishing thing, maybe it's a man-in-the-middle attack, maybe it's a piece of bogus software that's tricked you, but that's a problem for blockchain. All right, what are critics saying about MicroStrategy Orange? It's very similar to NFTs is basically what it is. Institutional grade spam has entered the chat. So I guess a lot of Bitcoin people feel that using ordinals to stuff other information onto the blockchain is just spam. And I think there's definitely a good case for that. They're calling him Fed Boy now. Michael Saylor is Fed Boy with the decentralized. I guess the whole identity thing panders to that microchip in the brain conspiracy theory, if there's a central identity. Yeah, a lot of people in crypto really do think government is like this big evil entity that's going to take everything over. And a centralized identity system does kind of pander to that conspiracy theory. So I can see why they don't like that. When will the Orange protocol come online? There's an early draft, but there's no telling. So again, nobody really knows. And that was 9 months ago. And I Googled, and I haven't been able to find much since that just initial announcement, which is, that's common, unfortunately, that we really don't see this. So now let's go to MicroStrategy pivoting to now call themselves Strategy. The next big thing that they've done, have they announced that MicroStrategy Orange is a tremendous success? Because this was 9 months ago when they were making that announcement. Have they announced all of the people that are using it and how widespread it is? No. Now they have just simply changed their name to Strategy with a Bitcoin EB there. I don't get it, but their website is at strategy.com, not Strategy B. Strategy is one of the most powerful and positive words in the human language. It also represents a simplification of our company name to its most important strategic core. Okay. Strategy is innovating in the two most transformative technologies of the 21st century, Bitcoin and artificial intelligence. Okay, so they're now glomming AI onto this too. I'm not exactly sure where the AI comes in. I don't think AI really has any place in this identity scheme they've got going. But like a lot of crypto companies, if another technology comes along and it seems to have momentum, they try to glom onto it to make their scheme seem like it has potential. And I'm going to do some episodes on AI in the future for sure, because I think there's a lot of overblown stuff about it. But I will say that AI actually is a legitimate technology that does have some benefit and can do some things better than what we've been doing. But it may not be the world-changing thing that, people are saying. And we'll get into that in a future episode. So, Strategy is the world's first and largest Bitcoin treasury company. So that's what they're calling it now. We're a publicly traded company that has adopted Bitcoin as our primary treasury reserve asset. By using proceeds from equity and debt financings, as well as cash flows from our operations, we strategically accumulate Bitcoin and advocate for its role as digital capital. Our treasury strategy is designed to provide investors varying degrees of economic exposure to Bitcoin by offering a range of securities, including equity and fixed income instruments. In addition, we provide industry-leading AI-powered enterprise analytics software, advancing our visions of intelligence everywhere. So what they probably have done is tacked AI onto their core software, which was supposedly analytic software that they were offering. But it remains to be seen if they're really growing in this area, because it seems like MicroStrategy has kind of been atrophying over the last few years until Bitcoin came along, which is obviously what prompted him to dump everything into Bitcoin instead of maybe make his software better. You haven't heard much about their stuff, but obviously they've got some AI stuff now. So that's the little press release came out February 5th. Let's go to the strategy website, because I discovered some interesting stuff here that I thought was really interesting. So if you just go to strategy.com, this is what you get. You get a list of metrics on MicroStrategy as well as Bitcoin, debt, assets, options. It just shows different things. And then you see charts here. If you click over to charts, you'll see this really impressive looking chart here where MicroStrategy is kicking everybody's butt, from NVIDIA to Bitcoin to Tesla to Meta to Google, Apple, everything. Look at this, 2,600, 32% versus NVIDIA at only 1,100%. What is going on here? What is this BSE return, right? I was trying to figure that out too, but that certainly looks impressive. What exactly is that? So if we go over here to BSE return, this is what it says. It says the percentage return on MSTR price since August 10th, 2020, the beginning date of the Bitcoin standard era. Okay, so BSE stands for Bitcoin Standard Era, which I assume is a take on BC, AD, BCE, ACE. So what is Bitcoin Standard Era, and why is the date August 10th, 2020 important? Let's take a look at purchases. Okay. And if we go back in time, these are all the acquisitions of when MicroStrategy bought Bitcoin. And the significance of this August 10th date apparently is it's the very first date that MicroStrategy bought Bitcoin. So they have created their own metric called BSE, which is the date in which they decided they were going to buy a bunch of Bitcoin and hold it as a corporate asset. That is MicroStrategy's BSE metric. Why should that matter to anybody else? Who knows? But I guess on August 10th, 2020, maybe NVIDIA should have been thinking about this. Maybe Apple should have been thinking about it, but they weren't. So MicroStrategy was. So therefore, MicroStrategy is better. So anyway, that's the craziest metric I've ever seen. And they actually have the gall to use that as some kind of a metric that you want to pay attention to. There's another metric here, which is also very interesting. And let me find that. Another metric that MicroStrategy or strategy has just introduced arbitrarily is this thing called yield. So Bitcoin is not an asset that creates value. It's not like a stock. It doesn't generate income, right? It doesn't have dividends. It's just a speculative commodity that you hold, and that, if it goes up in price, you sell it, then you see a return, but it doesn't pay you any income or dividends while you're holding it. So when you typically hear the term yield, that's what you're thinking of, a financial instrument that has the ability to create value. But once again, in the world of crypto, these people take traditional financial terms and redefine them to mean something else. In this case, this yield, as you can see, it's a KPI, a key point indicator. that they have created out of nothing that represents for the period specified the percentage change in the ratio between our Bitcoin count and our assumed diluted shares outstanding. So this explains why MicroStrategy is continuing to buy more and more Bitcoin at just about any price. They're creating this weird metric that they're going to use called BTC yield. So the more Bitcoin they hold against the more shares outstanding, they can manipulate this number. They can sell shares to make the yield go down. They can buy shares to make the yield go up. So if the price of Bitcoin goes down, rather than fixate on the fact that they may have lost tremendous amounts of money in value, they can instead just buy more Bitcoin at a lower price and instead flaunt this yield number as going up. I know it sounds crazy. Again, I'm not a financial analyst. I'm just a caveman. Somebody thawed me out and I went, what the hell is a BTC yield? Okay, now we know. It's a weird metric that they've introduced that represents a ratio between how much Bitcoin they hold and how many shares they have that they can manipulate and do whatever they want with. But it also looks very impressive. And it looks like, if you buy shares of Pfizer, there's an EPS, there's a percentage yield you get there. It could be anywhere from 3 to 5%, depending upon how good the company's doing. That's actual income you get. This is a magic number that, as far as I know, doesn't represent any dividends or any income. So if it does, if anybody can explain to me how you're going to get a yield on that, I would certainly love to see. But this just seems to me to be very, very misleading. And now we see kind of where MicroStrategy is going by creating all these leveraged debt instruments to be able to accumulate more Bitcoin. And if the price of Bitcoin goes down, I think their average purchase price is, do they have it set what their average cost of their Bitcoin right now is $65,000. So this is all the average value of all their holdings. So if the price of Bitcoin goes below that, they're in deep trouble. And that's very possible. That's not that far off from where it is now. And they've purchased this stuff over a period of time and gone into debt, and there's going to be calls on this. So it's going to be really interesting to see what's going to happen in the future. There's all kinds of people in communities like Wall Street Bets that are like trying to guess when the collapse is going to come, when they're going to get margin called. But again, it's hard to time this. You just don't know what the market is doing. So this is what's going on with strategy or MicroStrategy. I'd love to hear your comments and what you think. If I got anything wrong, am I missing anything? Is there any reason to pay any attention to this BSE metric? It just seems very misleading. Anyway, that's my little thing. What is going on with Michael Saylor? And what do you guys think? Is this crazy, or am I the one that's crazy and don't understand it? You let me know. In the meantime, I want to thank everybody for tuning in, and be sure to subscribe. And if you would like to come on the show and talk about things, send an email to adam@ioRadio.org, and we'll set something up. I am always willing to chat and debate and discuss things. So until next time, once again, I want to thank everybody for tuning in and listening, and be sure to subscribe to both the YouTube channel as well as our podcasts, which are on all the major platforms: iTunes, Amazon Music, Spotify. Just search for ioRadio, and you should be able to find it. Or you go to the website, ioRadio.org. You'll find links to all of the podcast platforms and everything like that. And be sure to visit the YouTube channel. It's YouTube/American Scream Video. You can find a link to that at our main site, which is ioRadio.org, or the site for my documentary, which is called Blockchain Innovation or Illusion. That's at blockchainii.com. And again, thanks very much for your support. And if you would like to appear on the show, or you want to debate, or you want to discuss anything, email adam@ioRadio.org.